Hello everybody, welcome to TraderMerlin Show. Another crazy day out there. It just seems like it never ends. Today's show is going to be a little bit different. I'm in the process of changing the way we do the beginning of the show, since the title of the show today is really going to be looking at how to scan the market for trades. I'll spend a little less time at the beginning going over our top 7 markets, and just so we can get to that part a little bit earlier, because I know kind of the way YouTube works is people want to see those titles right away. So I'm going to start things off very quickly just by going through some of the things that have happened out there in today's market. Obviously, it was a wild one to be sure, some craziness. So I will go and show you, I guess, the major stuff, the big news that happened out there. Predominantly, crude oil was the topic du jour. But I will real quickly give you some of the other numbers out there today. You know, we looked at the 10-year. That was noteworthy. I mean, it was a 10% decline in the yield of the 10-year. We were at 0.57. We have been talking about this moving back up to these highs from the 9th of April, or excuse me, March. And this is really an ascending triangle. It is building strength and looking like it wants to break up. That means those yields on that 10-year are probably going to take a drop. And right now it's down almost 9% at 0.57. So that is a pretty noteworthy piece. The indexes were no big deal. Your NASDAQ, I say no big deal. This is the new normal, everybody. The NASDAQ is looking at down, what do we have? Down 3.48% for the NASDAQ. When you look at the S&P 500, similar picture, down 3%. And really not that bad from a technical perspective. It's just a second big sell-off day in a row. You also have the Dow Jones Industrial Average was down 631, so I'll bring up your YM futures. Russell 2000 rounding out the indexes as the best of the indexes at down 2%, 2.33 to be precise. Gold. Unfortunately, I saw gold today drop below that 1700 mark. I was really hoping we would get a close above that line. Unfortunately, did not. We are at 1699 right now, so it's not like it's way below it, but still, there's a lot of psychology in these numbers and how things close and open for the day. Bitcoin was up 0.14%, but that's really not the story. I'm going to switch over to TradeStation here so we can look at the CL platform. I want to start off by looking at CLK20. This is that contract yesterday that went to negative. That's right, negative $40 a barrel. I was sitting there kicking myself because last night I thought, you know what, I should just buy this thing, see how it pans out, because it should close around market value. It should expire at market value, and lo and behold, it did today. Look at the 15-minute time frame on crude oil. You can see there's that low print of negative $40.32. It rallied aggressively. Shortly after it bottomed out, it was back above positive, and it moved all the way up, closing at 906 today. Of course, that's not what we were trading. We were trading the CLM20, which also had a pretty wild ride, and I'll show you a 15-minute time frame on this one. There's a pretty wild swing. James Lovelace, who's in our audience today, and he's been pounding the table, says $5 oil is what he sees. You were so close, $6.50. Hey, you know what? I'll pay homage. In a million years, I would not have thought that we were going to get down to $6.50 on crude oil, which just seems like an impossibility. But as these markets go to show you, nothing is impossible. It can continue to go lower and lower. Right now we're at 13.12. I'm going to leave a little bit of a humorous note here before I get into the stuff we're going to talk about today. For some reason, let's see. You guys know I was long crude oil, and last night it started to just really aggressively fall, as you can see here on this chart. I'll show you right what it looked like when I went to bed. I'll make this full screen for you, and right as I was about to go to sleep, crude oil started doing this, and I'll give you a quick little click through. It started dropping, looked real aggressive. It ripped through those lows, and I'm like, okay, I'm out. Okay, so I stopped out. I took a pretty nice loss on that last night, more than I wanted to, but I was trying to hold on as long as I could, and took a pretty significant loss on that one. And, I posted this loss on the Twitter feed because many times we take a stop and we go, damn it, why did I do that? If I just stayed in, I would have made a ton more money. If I didn't get out of that position, I would have lost a lot more, to the tune of probably 5 to 6, maybe 7 times as much. Watch what happens after this. I'll put a line kind of where I got out here just to give it a ballpark figure. It was right at about $20. But now you really see this thing cratering. I mean, this is unbelievable. And that looks like it's just unbelievable, right? It went from 20 all the way down to 12. And then you're like, oh, man, that's terrible. Yeah, we're not done yet. Let's just take that next leg down when the market's opened up, and we saw us go all the way down to $6.50. It was absolutely nuts to see what happened out there in crude oil. Anyway, that was the show for today. And what I thought was kind of funny was when I got stopped out, no big deal, took a big loss. It's just part of what happens. You know, you have to kind of stomach those things as a trader. I came back in this morning and I saw it down at $7 and I went, are you kidding me? I'm going long. I am absolutely buying long. So open up my TradeStation, bring up my platform, and like, boom, I'm even doing market buys because if I get it $7, $7.50, $7.75, I don't care. I'm holding it for a while. Order rejected. What? Order rejected. What? It kept telling me my order was rejected. So after an hour getting through to customer support and tech support, they stopped allowing trades on crude oil futures. So this is the beauty of understanding different asset classes, because my brain's going, how the hell are you going to tell me I can't trade futures on the most volatile days where you want to be trading futures on crude oil? So what did I do? Well, I looked at USO, which, you know, I'm not going to touch USO. First off, I don't like trading penny stocks. It's just not for me. USO certainly did have some nice moves out there today, but I'm not interested in USO. So I brought up UCO, which is a double long. Oh, sorry. I'm on the wrong screen there. I brought up UCO, which is a double long. And it doesn't look like it really, it did very much here. But if you look at the scale, it closed yesterday at $33. It opened this morning at 22. That's a 33% drop, and it fell even further. So watch what happens when I put this on like a 5-minute time frame. You really gain an understanding of the moves here. This I'm in at 13. So my average is 1303 right now. I sold out of some of it. I still am holding some as we speak. But ultimately, I bought 8,000 shares of UCO and rode this out to, you know, it just kept drifting. And if you're thinking it could go long, sorry, Harrison, shortest show ever. My bad. Yes, UCO has a 25-for-1 reverse split. That does change things. The reverse splits always create a little bit of a change out there. It was actually halted. That's what was interesting about this. When it spiked up here, you guys can see that there's these two candles right here. It was just a huge run. My account went from negative like $2,000 to $25,000 in a period of 10 minutes. And I'll even shorten it down here to a 1-minute time frame so you can see this, because it was just an unbelievably quick move. And I think it's like a 3-minute window. There you go. So I had been long in here at 13. So 1, 2, 3, and I averaged in. So I didn't buy it all at 1303. That was just my average price. But you notice that these moves, they are huge. These are dollar jumps. So it jumped from $13 to $16.50 in a period of 4 minutes. Crazy move out there. And unfortunately, I had an order to sell. As soon as I saw this move, I went, this is moving too much. It was like a $25,000 positive account at that moment in time. Of course, it halted and then it just ripped back down. So didn't get out when I wanted to, unfortunately, but all in all, we did rather well on that one. I'm still carrying some of it as we speak. So there we go. All right. I went longer than I wanted to on that one because I want to get to our topic du jour. The topic du jour obviously deals with a few things. Actually, before I get to that, let me do one poll. You guys remember yesterday I was asking you about the poll. Here is the results of the poll. I asked you yesterday, by Friday, how many hedge funds will go bankrupt due to oil's actions today? Of course, that was yesterday. Interestingly, it's pretty mixed. My guess is you'll probably see it in the 1 to 10 range. I don't think you see too many because some will probably just hold on for dear life and ride it out knowing that it should have expired at market value. So we had 13% people say none. 1 to 10, that was 36%. 11 to 20 going bankrupt, that was 17. And then more than 20, we had 32% of people out there. All right, that's it. So the topic of the day is really a result of listener questions. And I've been trying to do as much as I can to get to listener questions. First one came in was from Tony. He says, would love to see or have a refresher on filtering out a group of stocks to day or swing trade. And then I got another one from Alan that says, how do you know what you're going to trade each day? There was another one from Eileen which says, I'm new to trading and find myself latching onto everything experts say on TV. How do I find the right stocks to trade? Well, that, my friends, brings you to the topic du jour, which is scanning for stocks to trade. Not stocks, scanning for things to trade. It could be anything, right? Most people that are watching this right now trade multiple asset classes. So a lot of people start with stocks. Maybe they move their way into futures markets. Maybe they get into Forex, maybe options. but generally they start off in the equity markets. So there's a couple things, and this was passed down to me when I first started off right away when I was starting out on the trading floor. Filters that you should do. The main reason we want to use filters in the markets is to, number one, to save ourselves a bunch of time, to prevent us from spinning our wheels, looking at stuff. Number two would be to not be swayed or influenced by people and pundits on TV. I used to have a little control panel here where I could hit a bunch of buttons and make sound effects. You know, where Jim Cramer is out there going, bull, bye, 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 and all these crazy sound effects. It's an entertainment show. You have to take everything that guy says with a grain of salt because you have to understand that those calls are staged. There are people in the back room literally reading a script, making calls to the studio that are all pre-done. It's not a live show. It is a pre-scripted show. When that's done, you got to ask yourself, who is putting those recommendations or those stock symbols up there? If I was somebody who worked for the network and knew Jim Cramer, I'd say, hey, do me a favor. I'm long 50,000 shares of this stock. Could you just bring that one on your show and give it a buy, buy, buy? Great. There we go. These pundits, it's not just Cramer, it's TV in general, are going to promote what's good for themselves or their friends or their clients or maybe firms that they worked for. They're generally going to help them out. So be careful what you're being told and what you latch onto. So that was for Eileen. Now, yeah, right? Buy, buy, buy. Big Ed says, don't listen to TV. I don't either. I try not to. I don't watch the news. I don't watch any financial programs. I'll do a quick 5-minute thing on Yahoo when I wake up and look at the markets. But that's our second reason, is we really have to make sure that we're not swayed by the opinions of so-called industry experts. And I would throw myself in that category too. When I say something that I am liking or I am in, you have to understand that if I'm telling you I like this, it's probably because I'm going to buy it or I am in it, and I will tell you if I am in it. Okay, that's certainly something that everybody should be doing. I don't want to come across as misleading, so if I'm in something, I'll say, hey, I am currently in UCO, okay, long. But a lot of TV guys don't do that. Number 3 is to do it in a way that allows us to help us succeed. That is because of a couple different things. Number 1 is you are removing risk from the equation. You're removing things that might be too volatile from the equation, and you're also taking out things that move too fast or illiquid. So let me go through a couple different things here, which are the basis point for all of this. For everything that you're going to be trading, regardless of asset class, you'll want to pay attention to these bad boys. So let me go to the next one. Our filter guidelines are rather simple. Number 1 is you're looking for ADV. What does that mean? It's average daily volume, okay? You really want to make sure that, we're going to look at Netflix because that was your popcorn trade of the day. Netflix is crazy after hours. I'll look at that here once I finish this whole thing on filtering. Average daily volume, for those that might not know what it is, it simply means how many shares are traded per day, right? The reason for this, the reason why I'm putting ADV is number 1 is a simple analogy. Let's say back in the day when you could actually go outside your house and go down to these things we used to have where people congregated called a swim center. They used to have high dives before America became a bunch of wimps and couldn't use high dives anymore because somebody hurt themselves like a moron and we all have to pay for it. Anyway, no more rants today. Imagine you go back to that swim center and you're there at the high dive and you look out this pool, this beautiful glistening pool, all these lovely ladies in bathing suits and ripped chiseled guys for the ladies out there. That's the ideal swimming pool. They're probably not like that anymore. Anyway, you're on the high dive, and you're looking down at this pool, and it's absolutely full of water, and you just launch off, do a nice little swan dive, cannonball, whatever you want to do. Bottom line is you hit this water, and you know that you are safe because you're in the deep end. It's 12 feet of water. There's not a chance on earth you're going to hit the bottom. That is what volume is telling you. How much water is in the pool? There are certain times of day. Like right now, if you try to trade UCO, you're not jumping into a full swimming pool of water. You're jumping into an Olympic-sized swimming pool that has like 1 inch of water. If you jumped off of that diving board, you would snap your neck. The risk is too great. So by removing things that don't have a lot of volume, you remove that illiquidity risk. And what happens there, for someone who might not know what illiquidity risk is, during regular market hours, a normal stock, let's pick Microsoft for example, will have a 1 penny spread. That means it's a difference of 1 penny between where you can buy it at and where you can sell it at. That's normal during regular market hours. And Microsoft is one of the most liquid companies traded on the stock exchange. But when the bell rings at 4 p.m. Eastern Time, 1 o'clock Pacific, the spread widens significantly because all of those institutions who are required to be buying and selling during normal market hours, they don't have to do anything. No more obligation. So the spread will go from 1 penny to 5 pennies, 10 cents, 20, 30. It could get even wider than that. Some stocks will have a multiple dollar spread, and that's just a sign of risk. Why is that so bad? Because when the shit hits the fan and you need to get out, you won't be able to get a good price, and you'll lose even more. That's why average daily volume was number 1 on the list. And I'll show you how to filter for that here in a second. All right, number 2 is pretty simple as well. You're looking for price. The main reason I put this on here is we have a flawed belief set which you have been trained to adhere to all your life, and that is this. When you look at something like, a $1,000 stock, the average smaller investor is going to look at that and say, thanks, Big Eb said the spread is 9 cents on Microsoft right now. During regular market hours, it's always a penny. I mean, you rarely see it not 1 penny. So right now, it's 9 times wider than it was normally. That's, to me, 9 times as much risk. Thank you, Big Eb. We look at price. The fallacy is that if I trade a $1,000 stock, I can't buy much. I can buy maybe a share or 2 or 10 shares. I really can't buy that much. But boy, I could buy 5,000. I have to write this number down. So let's say you can buy 10 shares of a $1,000 stock. Well, what people will do is they're going to go out and they're going to look at maybe a $1 stock, right? And say, oh, well, the $1 stock, I can buy a lot more. Well, is that really the case? I mean, yes, you can. But the $1 stock is cheap for a reason, and that brings you in. It doesn't usually have a good trend. It's usually very choppy. It's overly manipulated. But now you could buy 10,000 shares of that $1 stock. The point is, if you invest all of your money, let's say you have $10,000 to invest, and you invest either in 10 shares of a $1,000 stock or 10,000 shares of a $1 stock. If those securities move 1%, how much have you made? You've made 1%. Doesn't matter which security you're trading. So don't worry so much about price. The issue here is we want to make sure we remove the small cap penny stocks. I know some of you will hate me for this. Some of you really like penny stocks. Not here. That's not my channel. It's not my thing. I know some people love them. I think that they're a gambler's habit, and you'll probably lose money in the long run trying to hit that grand slam. That's just my opinion. So I automatically remove cheap stocks, and I also remove stuff that's really overly priced. Here's why. When something gets very high priced, like Netflix, which came out with earnings today, like Amazon, like Google, the moves become very, very exaggerated. They're thinly traded because you don't see a lot of people buying 1,000 shares of a $1,000 stock. They're going to be buying smaller increments. So the liquidity is a little lighter. So for me personally, I just remove those, and I'll show you how to do that in a second. All right, your third criteria for filtering guidelines is very simple, and that is volatility. If you are trading something that doesn't move at all during the trading session, there's no point in trading it. The whole goal of being active trader, as Tony says, he wants stuff for day trading. I need it to move during the day. I'm not concerned if it moves, $1 over the next month. Who cares? I'm not in it that long. I need it to move 30 cents, 50 cents, $1 in the next 20 minutes or so. So there are filters we can use for that, and I will show you exactly what those are right now. So let me go out to trading platform. I'm going to do this through TradeStation just because it's much easier for me. You can do this on a wide variety of different platforms. There's a lot of them. And I'll run through those prices. Paula says, what is a high price or low price? That's a good one, and I'll show you that here in just a second. Jerry says, do the opposites of what these so-called experts say. You know what? I did build an inverse Kramer portfolio, and it was literally the exact opposite of what he did, and it was performing rather well. Oh, the irony. Okay, so I'm going to do this on TradeStation. There are these filters and scanners on almost every platform that you're going to get. TradeStation, personally, and I'm not sponsored or paid for by anybody, guys, so don't think I'm plugging them. They do have one of the best scanners and filters out there. It's called the Radar Screener, and I love it. It's one of the main reasons I'm with TradeStation is for the Radar Screener. Okay, a beta of 1 for volatility. No. Harrison says a beta of 1 for volatility. Real quick before I go into the filter and show you it all. When you look at beta is a beta of 1 means the volatility of the S&P 500. That's what beta is measuring, is the volatility of that basket, the S&P 500. So you could use that, but then again, if you're a shorter term trader, do you want something that just moves average or do you want something a little bit higher? You might want to go for something like a beta of 2, which means it moves twice as much as the S&P. Now, if you keep amping that number up, it could get rather risky, right? You could find yourself in some stuff that's just moving way too fast. And again, that needs to be tailored to you and your personal preferences. If you're just starting out, I think a beta of 1 is probably actually okay. Start really slow. You're trying to learn a lot of different things here. Don't make the mistake of jumping into something that's too volatile. It'll just churn you up. So with TradeStation, what I've got here, you guys can see I've got 2 symbols. I've got Microsoft and I've got Crude Oil on here, right? And I just have it set up there as 2 items. So what's really cool about TradeStation is I can right mouse click and I can go insert symbol list. Right mouse click, insert symbol list. And they have a bunch of presets. I know it's really hard to read. I can't increase this font size, I apologize. But they have a TradeStation symbol list where I can go to index components and now pick my index. So let's say I want to look at the S&P 500. Well, you want to look at the S&P 500, the 100, or the mid cap. Well, we pick the 500. And when I do that, it'll populate this whole list of securities in here. Right now I've got tons. I've got literally 502, I believe is how many there are now. Let me just get these out. Oh, they actually dropped it down to 500. That's kind of weird. So let me get rid of all that. And right now in that index, there are exactly 500. It was 503 for a little bit. So I've got all these stocks in here. But for most of you, you're probably looking at going, you know, some of this stuff I don't need. So remember, we talked about average daily volume, we talked about price, we talked about volatility. So all I'm going to do is add in criteria which allows me to filter for that. Now, yes, this does take time, but once you set these up, you won't need to really filter them again. So you can see here we have interval. So there's the daily, the last, that's our price filter. So all I'm going to do is double click. So I've double clicked that, and for me, my rule has been anything under $15 goes away. So here's Kinder Morgan. I'm going to go bye-bye. I'm basically going to select everything under 15 bucks and delete it. So there goes 48 stocks on this list. Oh, bye-bye Ford. Oh, Ford and GE aren't going to be traded by me. I don't care. It doesn't make any difference on the symbols anymore. For me, drug stocks are a no-no, but other than that, it doesn't make a difference. Here, NVR. Right? You guys want to trade a $2,800 stock that's NVR incorporated. I'm going to remove those. I don't like the real expensive stuff. I'll probably go down to, I'm going to leave now. I'm going to stop at Netflix. All right? Just because I like trading Netflix. It's got a lot of crazy moves. So I'm removing another 14. So I've taken this list of 500 stocks and dropped it down to 438. And I have a lot more to do here. So Joseph says, how many days to calculate ADV? Well, let's do a couple different things here. First off, I need to add in a measurement for average daily volume, and I need to add in a measurement for volatility. That would round out our trifecta here of analysis. So let's go to insert analysis technique. I'm going to go to ADV, which would be average daily here it's actually called ATR, would be average true range. That's for volatility, right? So that's how much it moves, would be average true range. I'll add that one in. And then I'm going to go to volume, and I'm going to go to volume average, which is right here, volume average. Add that in, okay? So now it's going to populate a whole bunch of different numbers. It's going to take a little bit of time here. It's a lot of data coming through. But you can see that right now, the volume for most of these for today is going to be way higher than normal because market volume is in very, very high lately, especially for Netflix, which just came out with earnings. So you can see here it says volume average. I'm going to double click volume average. And anything below 1,500 shares, and this is just my number. Make sure you guys understand that. This is a number that I'm using as a shorter term day trader. 1.5 million to me is enough for me to trade 1,000 share blocks at a time and get in and out when and where I want. Anything lower than that, your spread starts to get a little wider. You have slippage problems, which means you go to sell 1,000 and you get a couple different fills. It just removes risk. I mean, let's be honest, do you really care about most of these companies on the list? Probably not. So I will go to 15 or 1.5 million. And yes, this does change, but it's going to give you a ballpark start. Okay? Let's go take all these out. So once I remove these securities that don't meet my volume criteria, there we go, remove those. Now we are down to 352. But wait, there's more. The last one here is average daily range. This means how much does it move per day, average true range. Most of the stuff's going to have a really high ATR right now. But let's say that you wanted to move $1.50 a day. I'm just making that number up. I don't really have too much, I'm not too stringent on the average true range category here. But let's say I wanted to move $1.50. All right, I'm gonna go here. And the question was, how many days does it calculate ADV? ADV is defaulted to 14 days. You can change it to whatever number you want, but it's defaulted to 14. So I'll take those out. Oh, goodbye Juniper, my former love. And now I'm left with a small group of stocks. I say small, smaller, right? We're probably down right around 300. And you can whittle this down even further. There's other things that we could do. Now, here's one thing that I used to like to do. I'm a pattern guy. I'm a chart guy. So what I would do is I would minimize my chart. I have this linked up here. And I would simply just start running through chart patterns. And just if I saw something that really stuck out, I would make a note of it and go back and make a trade plan for those. Yes, you can put these filters in a scanner so you don't need to go through radar screen and delete. Yes, there is a scanner built into TradeStation that you can actually do that as well. There are many other sites out there where you can actually build your own scanners as well, and I would recommend doing that if you you might have a recommendation out there, Alpha. I just use the ones built into TradeStation, but if you are using one, you feel free to share it. I think that they can be very beneficial. I'll show you one on FinViz, which is pretty cool. So this is one way for me to find, securities that might be coming into an area of demand. If I find it, I'll just make a special note. Other than that, there's not too much I'm going to go into here. What I do like to do is I'm a fan of patterns and some technical indicators. Now, what I'll show you here is just a matter of personal preference. This is something that TradeStation put in a while back, which I really, really like, and it has to do with Bollinger Bands. Let me explain. Bollinger Bands, for those who might not know, are simply a tool that tell you if a specific market might be overbought or oversold relative to its previous moves. That sounds like a bunch of mumbo jumbo. I'll add it on here and you guys can see real quick what Bollinger Bands look like. You have this bottom band in red. This cyan one up in the top is 2 standard deviations away from this middle. It's all statistics. And what it says is if something's outside the lower Bollinger Band, it's overextended. Statistically, it shouldn't be there, and the odds are good that it could come back up. However, look at MAS here, this Masco Corporation. It was outside the lower Bollinger Band for 1, 2, 3, 4, 5, 6, 7 days. Had you bought just because it broke the lower Bollinger Band, you'd be losing a bunch of money. So what do we do? Well, we can obviously make a line on a chart where it's going below the lower Bollinger Band and go and look for demand level or supply. I like to simplify the process by using a scanner. Check this one out. This is one of my personal favorites. I've used it for a long time. So now I want to add in one more. And this is an indicator they added in a while back, which when they told me about it, I was in love with this thing. It's called Bollinger %B. Now what Bollinger %B does is it says, okay, great. I don't want to go through and look at every single chart and see where the Bollinger Bands are. What I want you to do is I want you to show me exactly where and which securities are above or below the Bollinger Bands and by how much. So let me put this back over here. You guys see this little column right here on the right-hand side of the screen. It says %B. This tells you where it is in relationship to those bands. So if I'm looking for something that's overbought or oversold, I would want to look for something that's below 0 or above 100, right? So I'll sort them. Right now, nothing is below the lower Bollinger Band. So everything is moving up. Maybe there's something that's above it. Okay, there's only one security out of those that we've filtered that is above its upper Bollinger Band. That's FLIR, F-L-I-R, FLIR Systems. So all it's doing is alerting me to a security that is outside its upper Bollinger Band. This filter shows me something that has maybe moved too far too fast, either up or down. And if I can line that up with an area of supply or demand, then I may have a potential trade on my hands. But certainly, just because it's outside its upper or lower Bollinger Band does not make it a trading opportunity. Does that make sense, everybody? It's pretty important you understand that by itself, the indicator is not that great. It's just a tool to help you find potential opportunities that you're going to want to line up against supply and demand. Okay? Patrick says, can you show us what you use for indicators on currencies? Just moving averages. I'm just a trend guy. I'm more of just a simple trend trader up in a supply and demand. When I'm looking for equities, Because here's the challenge with that. When I'm looking at and this is for Patrick, great question. When I'm looking at the Forex markets, I only trade like 5 different instruments in the spot markets. That's it. I don't trade the exotic stuff. I know, call me vanilla, whatever, I don't care. It's just what I do. In the equity markets, though, I've got tens of thousands of securities to filter through. So there might be something that has an amazing setup that I'm not going to see. When I look at the spot Forex market, I can run through 6 markets real quick, and I don't necessarily need to have all these indicators on it. So that's, unfortunately for me, RSI is fine. Again, RSI, MACD, stochastics, those types of indicators are great, but they need to be secondary support. Your primary decision should be off of supply and demand, or looking where you're seeing those major turning points and qualifying those turning points. So that is a basic thing of scanning and filtering. Basically, the whole point of that exercise in TradeStation, which we did from ground up just so you can see all the steps, was to show you, number one, we want to filter out a lot of the stuff that we shouldn't be trading anyway because of volatility, illiquidity, and things that don't move enough. So to me, really important to do that with whatever you decide to trade. I'll show you a couple other things here which I find useful. Where am I going to take you to next? There's a couple different scanners. I saw that I saw a couple of you were talking about different sites. I didn't get a chance to catch all those, but let me try to get through some of these. FinViz has a really interesting one, and I'll try to bump the font up here so you guys can see a little bit. You can see here they have screener. So you can run their screener and say, okay, well, we'll do kind of the same things we just did. I want to go through here, and I'll go to, let's go to all the criteria. I mean, these are all the different filters, which is crazy. I want a security that's over, let's say over 15. All right, it's filtering down. We went from, we're now at 4,302 stocks potential. Let's remove that. Let me go anything here just to show you what the filtering process looks like. So right now on this list, this filter, it says that there's 7,673, which I think there's actually more than that. I'm not sure why it's just that much. Huh, okay. We're going to go for price over 15, which we just had. We're going to go into, it says average true range. Let's say we want it to be moving over $1. And I want volume. Where's volume on this one? Moving average, high volume. Bear with me as I'm trying to find the volume. There's a lot of things to look at here. Simple moving average daily. Okay, average volume. And I want that to be over, I'll just say 1 million, right? So right away, that 7,000 is whittled down to 1,000. I really made a quick cut of this. And yes, it is free. The FinViz is a free site. It's pretty awesome. All the stuff I've used on FinViz is free. There is some paid stuff, but. And let's go to the gentleman had a question earlier about beta. You notice there's also another one over here about beta. You can see you got a beta. Let's say we want it to be a beta of over 2. Oh, because I want volatility. I'll say over 1.5. I want something that's moving. Let's see, does that change my numbers at all? We're now down at 146 stocks. So real quickly, I come up with 146 securities, which I could now take and export or copy this list and import it into my trading platform, whatever it might be. I could also remove some other industries like biotech because I don't trade those. But that's an easy one to do. The other part I like here with FinViz is right at their homepage. You guys probably know from some of the comments I made here recently, I'm a pattern guy. I actually really like chart formations. So when I see something, I believe it's like behavioral analysis. And think about your family or friends. You've all got a friend or a relative or a nephew or a cousin that comes over and they have this pattern of something that they do. It's predictable as all hell. Like, all right, Uncle Joe, he comes straight in, he says hi, gives me a hug, and he goes and grabs a beer out of the fridge like clockwork. It's a pattern. So we can now exploit those patterns and utilize those patterns to our advantage. Do they always work? No. But all we're looking at really is an odds enhancer. Anything that I can do to even give myself 1% more probability of it working in my favor, I'm okay with that. So one of the things they have on FinViz, which I think is pretty cool, down here you'll notice there's a bunch of different chart patterns. So you have wedge down, double top, multiple top, double bottom, head and shoulders, channel. These types of patterns are all built into there. So if you really like patterns, like let's say you, it's tricky because their head and shoulders is so subjective. But let's say you want to look at a double bottom, right? Double bottom is a typical reversal pattern. Isn't this convenient? Look at this. This is great. The symbol looks like Merlin, doesn't it? MRLN. It's the Merlin stock. Marlin Business Services. So they're calling this a double bottom. Okay, great. I love it. I've got interaction out there with you guys. You guys have been plenty active. I'm going to read some questions here while I let you guys answer this. Would you call this a double bottom? Actually, let's look at this. Do you guys think that this is bullish or bearish for Marlin businesses? Right? A double bottom should be a bullish pattern. Is this a bullish or bearish pattern based off what you guys know about trading? What do you think? Bullish or bearish? Oh, wait. Let's see. Yeah, and everybody, if you wouldn't mind, give me a thumbs up. That does help. Yeah, right? Jerry's like, no, it's bearish. It looks bearish. It looks bearish. This does look bearish. So, again, the filter brought it to our attention because it has hit this price at about 633 twice. What's more important, yeah, I love you guys. You're all awesome. Everybody's out there going, bearish, bearish, bearish. It is bearish because look at the highs. Lower high, lower high, lower high. It's back down here. Every time it comes near these lows, it gets high volume. But boy, I tell you what, this MRLN certainly looks like it's going to break to the downside. It looks like it's just due for a downside movement. So even though it's a double bottom, I would not trade this. It would not be a bounce. This would be a triple bottom right now, would it not? There's another site that I like to use, which I find a little bit better. This one you have to pay for, but it does give you some free stuff. So how about you guys give me something? What do you want me to filter for? Is there any technical analysis piece you want me to look for? Stochastics, Bollinger Band filters. You want to look for specific candles out there. This one doesn't do formations like head and shoulders or anything like that, but you can program in, if you're a coder, all kinds of different things. Actually, Brandon Wendell turned me onto this site years ago, and I like it. But what would you like to look for maybe to build a scanner? Any guesses? Brian says a wedge. I would just use Finviz for the wedge because I don't know how you would program it in here. No? I'm shorting it tomorrow. James, it's a $6 stock, my friend. Be careful. I do not like shorting $6 stocks. Okay, well, I'll just kind of build one out here then. All right. So, real quick, you have a filter here where this one has gone and looking for example, this is a quick example of filter. It's saying a moving average 1350 bullish cross. So when the 13 period crosses above the 50 period moving average, it's going to show you all those different symbols. And that's going to give you a pretty basic one. So let me see if it's been so long since I've used this. Oh my goodness. Let's see if I can get it. It has been a long time. So these are all like a bunch of different filters that you could, shoot. There used to be some custom ones, some defaults. Oh, sorry, guys. I was going to show you. God, I probably should have built one out first. But I used to use this for candles, right? So here's some candle. Oh, there we go. So these are showing you Bollinger Bands contracting, crossovers. One of my favorite patterns out there is a hammer formation. So let's go to a hammer formation. So there it's showing you right now the details of this filter. You'll see here in just a second. But we don't want all this, do we? I don't want it to be closing above 5. I want it to close above 15. I don't want its average daily volume to be 250,000. I want it to be 1.5 million. So now I very quickly can create a filter here. Now, it usually gives you a few for free. Okay, so here are a couple different symbols that showed up on this list. QID. God, I don't see these as being hammer formations at all. They're actually old hammers, stale hammers. Let me, I'm going to move this screen over and show you what it looks like on the platform that I have. So, I use the same filter as me. Let me show you on this one so you guys can see if it really was, in fact, a hammer formation. Because some of them you have to look at and go, what, really? Here's NEAR. N-E-A-R was one of the symbols that it brought up. This pattern right here, this candle from yesterday, is what it's calling a hammer formation. And technically it's not, because a hammer formation would be down near the bottom of a downtrend. Okay? A hammer formation, so Patrick says, can you explain the hammer formations? Sure. This hammer formation right here, this red candle that you guys see where my cursor is moving. Oh, can you see that? I'm not sure if I'm on the right screen. Yep. This candle right here, the second one in from the right-hand side. You see it's got a little red body, long bottoming tail. What that means is at some point this candle was all red, a giant red candle. And for whatever reason, buyers came back in and pushed it up to the top. So the candle by itself You could call it a hammer, but a hammer formation really has to be at the bottom of a downtrend, right? So yes, it's a hammer pattern, but it's not a hammer because it's in an uptrend. It's sideways. This is an insignificant pattern to me because of where it's at. You could say that it's bullish, yes, but it's flat. The biggest, most powerful moves I've seen happen on hammer formations is when this hammer is at the bottom of it, like a steep downtrend. Let's see if there's any others on this list that have popped up through StockFetcher. What else? I got PSQ. Oh, this is an inverse ETF. See, they had a hammer yesterday, but it wasn't really at the dead bottom, right? This is a better example back here of a hammer after a big sell-off. How about, it's funny, it's all the net inverse ETFs. JP Morgan Ultra Short Income, JPST. Again, same picture. This actually is what's called a hanging man. So it looks like a hammer, but its location makes it a hanging man. Yes, JR8 is right. It's location, location, location. Can you scan for breakouts? Yes, you can. There are some. It's going to take me a while because I haven't scanned for those. While I do that, let me explain something I think is rather interesting, at least noteworthy. So when I was on the floor back at Irvine years and years and years and years ago, and bear with me as I'm staring off of the screen here, so I'm trying to build the filter for Natalia and explain this story at the same time. So bear with me as I'm not looking at you guys. I'm still talking to you. So when I was on that floor out in Irvine, there was this one guy that traded next to me, and he was a pretty good trader. He had a very unique strategy, which is basically what he would do is he would pull up a watch list, a top 10, and he would look at whatever's making new highs for the day. So if it was making a new high, intraday high, he would just simply hit the buy button on 1,000 shares of it. Didn't matter what the company was. It was crazy. So as long as it was making a new high, he would filter through. So let me see if I can find anything like that. Gap down runners, volatility list. Yeah, I don't have anything like that, unfortunately, on this one. There's like approaching 52-week highs and 52-week lows types of things for this platform, but not really what you're looking for with regards to breaking highs. There are some ways to do it. I haven't done it personally. Let's say rapidly rising. All right, we've got 2 to choose from. That really doesn't help my cause. Let's go rapidly falling. Okay, so I'll format this a little bit better so you guys can see it. And I want to, do it with a very big asterisk here that this, to me, is a very dangerous style, but it is interesting if you think of it from a mechanics standpoint. So let me line this up here. And you see he's got Cons, he's got Halliburton, Boeing, and Apple on this list of rapidly falling. So here's what the guy would do. He would simply click on the symbol. If it was still going down on an intraday basis, or in this case, we picked falling, so he's going to be going short. If it was still falling, he'd simply short 1,000 shares and then go to the next one. Oh, it's drifted down. Short 1,000 shares, go to the next one. Still going down. Tesla, short 1,000 shares, go to the next one. Snap. He would do this until, yes, totally, Joseph. It was wild to see because sometimes he would be in 20, 30,000 shares of a stock. And he'd have, 12 positions open. But on trending days, he would be killing it on trending days. It's a dangerous strategy, but it's interesting if you think about if our goal is to get on something that's moving and running, it makes sense. I wouldn't just buy willy-nilly just because it's, it's making a new high for the day, but it is an interesting strategy. And what he would do is if he came back and that thing had gone down at all, he'd just close it out. So basically, anything that it was in his portfolio was moving, and it was the strongest stuff, and he just kept adding to those strong positions. It was a very interesting strategy. It did work for him quite regularly. Remember, back in the late 90s, we had very strong trending markets. It was a different time back then. Halliburton's earnings. What happened to Halliburton? Full commitment to the trend. Absolutely. What else we got here? Hammer formations are a really good confirmation to take the trade if it lined up with your demand zone. Yes. Here's the big challenge of that, Patrick. If you have a hammer formation at demand, God, I wish I had a whiteboard. I have a whiteboard. Okay, so I'm gonna make a white paper, my white paper board. So let's say you've got your demand zone, right? And price has come down, blah blah blah, and price is now hitting your demand zone, right? It's right there. If you get a hammer formation, so now let's say you've got a hammer. It looks like that, and it's got this long tail. So now your hammer is formed, right? And it's in the demand zone. If you trade the hammer, you're chasing it, aren't you? If you trade that hammer, you are chasing it. Why? Because it already came down to the bottom of that demand zone and is now ripping up. So if you were to buy in, sorry, I know it's crazy. If you were to buy in, you're going to be buying on that where that dotted line is once it breaks above this candle. But where should you have been buying? Down in here. So these candle patterns, while I love them, they're late. They're lagging, right? You're getting the confirmation. It's really confirming that something has left the building, and you're going, okay, now I've got confirmation that the buying is there on a hammer or on a shooting star, that the selling is there, and things start to come down. Cool? All right. Yes, the whiteboard. I'm working on it, guys. I can only do so much. All right. Well, that will do it. I'm done with my filtering guidelines. I wanted to show you, number one, again, it's average daily volume, price, and volatility. Filter your markets for those things. Of course, your spot Forex traders out there are going to go, we don't have volume. That's okay. You're not on the same constraints as the rest of us are. If you're trading stocks, make sure that that's what you look at. I would say become a better analyzer of stocks. Learn those equity markets. Learn how to spot demand zones or supply zones out there. Map out your trades, and then you can take any option strategy and plop it right on top of that. Makes it much easier for you to do. Forex Dissector says you could go to a lower time frame and look at demand inside the hammer candle. Yes, you could. You could. But again, once you change, if you were to change a hammer, let's say you found a hammer on a daily and you now want to whittle it down to a 15-minute time frame, that hammer no longer exists, does it? There might be a smaller one on a smaller time frame, though. Okay, so let's go back to tomorrow. Since we're right near the end, I want to do two things. Number one, let's go full left. Here's what we had happen today. Okay, Lockheed Martin came out with earnings. Earnings? Man, I can't even talk. I'm getting all excited. I'm trying to keep it under an hour show again. Lockheed Martin, you guys can see, had 5.6% surprise on their earnings. They beat, Coca-Cola beat, HCA Healthcare beat, and Comerica got slaughtered. Totally missed earnings by a mile. The noteworthy one here at the bottom is Netflix. I will look at that chart here in just a second. They missed. They're expecting $1.61, came out at $1.57. That, honestly, for me was a surprise. I kind of felt that they were going to beat earnings. Chipotle, look at their earnings. I think you're going to have some food chains, your major fast food chains are probably going to do really well this quarter. I'm looking out there, In-N-Out, which is one of our local haunts down here in Southern California. The lines are literally wrapping around the friggin' block. It's absolutely crazy. So that's what we've got cooking for. That was today. Of course, yes, I messed up on the date. Sorry. And then here's what we have for tomorrow. You have Delta Airlines, AT&T, Biogen, Ericsson, Kimberly-Clark, STM Electronics. These are all going to be these are pre-market, and then Xilinx and the rest are going to be aftermarket on Ameritrade. So I wanted to show you one last thing here. I've been working on a bunch of graphics. Of course, you guys know I'm always trying to build and make this show fun. Let's go back. Let's go back to me. Bring it back to me so I can get rid of that thing. I'm trying to make this show a little bit more entertaining and engaging. So how about this? I think I had it here. And I will try to get this all prepped for you. NFLX, right? Of course, we all know Netflix came out with earnings. And there's something that I used to do a long time ago, which I want to bring back to this show, which is really talking about the popcorn trade of the day. So it's time. It's our first popcorn trade of the day as TraderMerlin. Thank you, Tim, for the great graphics out there. Here it is, folks. The popcorn trade of the day. What does it mean? Nope, that's not the popcorn trade. I didn't fix that one. We'll just go right to the popcorn trade. This is what we get for doing live stuff without testing everything. Netflix. What happened to it? They came out with earnings. They missed just a little bit. Here's a 5-minute chart so you can see the volatility. This is why we call it the popcorn trade of the day, folks, because in a 5-minute window of time, Netflix jumped to a high of, give me that exact number there, Merlin. Looks like about I'm going to call it 486. All the way down to a low in that 5-minute window of 427. So you're looking at about a $60 swing in 5 minutes. Why do I call it a popcorn trade of the day? Because if you're sitting there watching these on a 1-minute time frame when the markets close, which is what you should be doing, you should not be trading Netflix or any of the other ones that are coming out this week with earnings. You are going to be seeing some major crazy swings. So get your bowl of popcorn and enjoy the ride. That's your first one. I will next time, because I didn't have the graphic ready in time, I will do the popcorn trade of the day with before it happens. We have another one coming up, not tomorrow, but Thursday. We've got a popcorn trade of the day, which should be pretty exciting. All right, what else? Yay, popcorn! I was like, who is this guy? Can you do a session with trade setups? Yeah, sure. I was gonna do. We had a request to do one on strategies, like different strategies and tactics. So I'll do different, different stuff. So absolutely. What would be beneficial, and it helps me because you guys request a lot of stuff, and sometimes I forget. Underneath this video on YouTube, send in your questions there. I go through them, and I'll put them all on the list and get them all answered. So underneath the YouTube video is the best. If you guys like this today, certainly click the thumbs up button. I do appreciate the thumbs up support. If you haven't yet subscribed, I'm actually going to be doing a whole bunch of different stuff with regards to this channel. So we are doing a live show every day at 2 p.m., but I'm also going to be putting up some incremental pieces that will not be the live stream. So subscribe, click the little bell if you want to be notified when I update anything. Again, if you have questions you want to send to me personally, you can send them to TraderMerlin.com. You can send them in there on the website, or just put them down underneath the video on YouTube. All right, I think that will do it for today, everybody. Thank you so much. I want to start. Where should I start? Alpha says, I want to start. Where should I start? Boy, I tell you what, you should ask that question a long time ago, because we've got probably 100 people in this room who are fairly active traders, could really help you out. You're at a good starting point here on this show, because I do cover things not at a super in-depth level, but you really got to understand the mechanics of markets, understand the basics of how they work, understand buying and selling in the marketplace as it relates to price movement. That'll give you that little bit of a competitive edge, or what I feel is a competitive edge in these marketplaces out there. But keep tuning into the show, everybody. Thank you so much. Hope you enjoyed today. I see I got a ton of questions, but I got to get some other stuff. I have to go work on an electric bike right now. That's my priority. So thank you guys so much. I appreciate it. Now I'll get to play the real outro for today's show. Until then, happy trading, everybody. I will see you tomorrow.